Making money from trading is simple, but being consistent is difficult. Now, today's video, guys, I'm going to show you how to be a consistent, profitable trader, making consistent money from Bitcoin, all right, using moving average and candlesticks. If that sounds interesting, kindly subscribe to this channel and like this video, guys. So let's dive into the chart. All right, guys, my name is Sam, and today's video, I'm going to show you how to be a consistent, profitable trader trading Bitcoin on a daily basis. All right, so as we all know that, the dream of every trader is to be a consistent winner, but trading is a mental game. Okay, so that's why most times many newbies find it difficult staying in the game, because for us to be a profitable trader, we need to have a defined edge whereby we keep doing the same thing, whether we are losing or we are winning, because we don't calculate our winning based on trade by trade basis. We calculate our winning based on a sample trade. All right, so I'm going to show you how you can take a sample trade and how to remain profitable. All right, so having said that, now what we are going to use to trade consistently and make money consistently is we are going to use moving average, and I believe most of you guys already know what is moving average. In case you're not, this is a trading view platform. You just click on this FX and you're able to enter MA and you're able to bring in moving average, either simple or exponential, it doesn't matter. All right, this moving average. So I already have it here. Now when you have your moving average, now the yellow line is the 20 MA, set it at 20. The white line is 200. Okay, the yellow line is 20, the white is 200. All right, so basically we are using 20 more, but the 200 is just to show us a super trend that is occurring or not. All right, so having said that, the first thing you need to identify from every chart, if you want to trade, this is Bitcoin, the first thing is to know the time frame you are trading. What kind of trader are you? All right, so it's very, very bad for you to be looking at 1 minute, and also if you execute your trade in 1 minute and you are managing it in 5 minutes. It doesn't work that way. So that's why you need to know the time frame of your market. All right, because every time frame you are in, what it shows that the time it takes the candle to form is that time frame. Like this is 1 minute, so that means in this 1 minute, every candle here, it takes 1 minute to form it. Every candle here, it takes 1 minute to form it. But now we're going to use 5 minutes as a case study. All right, so because we are using 5 minutes, we are going to stick on 5 minutes, entering the trade on 5 minutes and managing the trade on 5 minutes. Please, this is very, very important. All right, so the first thing you need to identify is the direction of the market as related to 20 moving average. Okay, if you look at this market now, you can see obviously that the market is trending down. All right, relative to this is 5 minutes chart. I can see that the market is going down. Because why is it going down? It's making a lower high, lower low, lower low, lower high, lower low, lower. So and the market is what? Is going down. So that is the first thing you need to identify in the market. So looking at this market, the market is going down. So the second thing you need to identify is, now if you want to take a short position or you want to take a long position. Now, anytime the market has been stretched, that is, whenever the market is going lower like this, lower low, and it has made like 3 to 5 moves downwards, like this is 1, 2, 3, 5 moves, like 3 moves or 5 moves, it is very, very risky for you to still be taking a short position any market that have gone this far. All right, because in that time frame, so being that we don't take any short position again once we see a market that have gone this 3 to 5 move down. Instead, we are looking for a potential break of the trend and a surge on the opposite side. So if you look at this market critically, this is the first thing you need to do. All right, so you can see that from here to here. Now if you draw a line here, you can see obviously that this trend has been broken here. You can see the trend has been broken, and the market might be reversing up or can still give us one more drop. All right, so the first thing you need to identify the direction of the market as related to 20 MA. So looking at it at 20 MA, the market is, the general trend is downwards, but temporal trend is the market is breaking upward. All right, you can see that the market already breaking. So let's assume that this is the beginning of a trend, because this market has been broken. This trend has been broken. This is the beginning of a new trend. So what is the first criteria? So the first criteria, as we said, that the direction of the market based on 20 MA. So the direction of the market now at this point in time that the market is going up, is trending up. All right, it's trending up. Now the second thing is to take a look on the candlestick. All right, so we don't really focus more on candlestick, but there are indications where we focus more, whereby we have an engulfing candlestick. An engulfing candlestick, we only take two scenarios. The first one is whereby the red are engulfed by the green. That means anything above the 20 MA, like we have here. Look at this is red here, and from here it was engulfed by the green. So that's another criteria we watch. Or whereby we have a hammer. A hammer is this. So I'll show you practically. You see what we're talking about. This is a hammer candle. Let me stretch it. You can see this kind of candle here. We call it a hammer candle. Okay, you can see another one here. These are hammer candle. You can see the long tail here. So these are the things we look out for. Okay, we look out for this. This is a pin bar. We look out for this, either pin bar or hammer above 20 MA. All right, above 20 MA. So we look out for hammer or pin bar or an engulfing candle above 20 MA. So what does it tell us? Anytime we see hammer, pin bar, or engulfing candle above 20 MA is an indication that the market will still push higher. And whenever we see that, then we can now set the rule that anytime the market goes above that hammer, we are taking a long position. Okay, we are taking a long position. You can see if you have taken a long position here, okay, it is profitable. If you are taking a long position here, it's profitable. If you are taking a long position here, it's profitable. You can see how it is. And now this other thing you need to consider is your stop loss, which is very, very important. So the stop loss is where we protect ourselves in case we are wrong, which is very important. Risk management. So our stop loss will be the total length of that pin bar or hammer candle or engulfing candle, which is here. All right, so we put our entry position here, and we'll put a stop loss here, and we're able to ride on this wave. So the same applies here. You put an entry here, you put a stop loss here, we're able to ride on this wave. So what will be your target? Your take profit will just be 2:1. Okay, you can measure it 2:1, or if you're very aggressive or you're trading with a big volume, you can just take the trade equal to your stop loss, 1:1. Okay, and it just depends on individual. Okay, based on individual, but most times if I'm taking a trade based on how far the market has moved, and I put it 2:1, and I always ride on the wave for at least 1 hour. Ride on the wave for like 1 hour before you're able to see a big profit. And most times I always like to add on this. So let's recap what we've just established in the past. So the first thing we need to look out for is you need to check the relation of the market to 20 MA. All right, so the general trend now shows you that the market is going what? Downwards. So you need to bear that in mind, that this market is going downwards, but temporarily the market is trending upwards. So if I'm taking this trade now, I'll be very, very aggressive. Okay, because I wouldn't know if this market will still continue going down just based on this. All right, so be very, very aggressive, that it won't be loose on the trade, because the general trend on 5 minutes is downwards, but temporarily the market is trending up. I believe you know that when we say market is trending up, any market that makes a low and makes a high and makes a lower low, is assumed to be what? Trending downwards. And the same thing applies. Market makes a high, makes a low, and which is higher than the previous low, and makes a higher high than this. The market is said to be what? Trending up. So anytime you see this pattern set on any market, that means the market is trending in that direction, either downwards or upwards. Okay, that is the first basic thing that you got to know. So now, let's take a practical scenario of what the market is doing. So you can see that we don't take either short or long until we see the movement along 20 MA. All right, so the first thing now, okay, let's assume we are trading from here now. You can see the market is here, it comes here. All right, so it gives us this candle. All right, so this candle now, it hasn't given us any good indication whether the market is trending up or is trending low, because it just make this aggressive move. So in this scenario now, we don't take any trade because we don't know what is actually the market is doing, right? Because looking at this previous movement, all right, the previous movement doesn't really show us anything. Probably we might be waiting for a market to correct itself before going up. So let's forget about this previous move. So you can see from now, the market gives us one, correct himself, and good. So a trend has been formed. You can see now, this is a lower low trend. So obviously, we are now seeing that the market is trending downward based on what happens here, guys, based on what's happening here. All right, so now, what we'll be waiting for now is an engulfing candle below 20 MA. All right, so I can see that here. This candle was totally engulfed here below this 20 MA. So we are taking a short position here, and you can see if you have taken that short position, it went beautifully. All right, so look at another engulfing. Whether it's one candle that engulfed or two, you can see it went beautifully here. You can see another, this is pin bar. We don't consider this because of what? We don't consider this to be a buy because the what is below 20 MA. So instead, we are looking for a short position, which we found here. This one engulfed this green one. We are taking it downwards. You can see another one here. So provided the 20 MA is going down, it was engulfed here, we take it short. It was engulfed here, we take it short. So you keep taking all these things until the market is broken, like what we are seeing here now currently, that this trend is about to break here. So we are waiting for a confirmation whether the market is going up or is still coming down. All right, so if we go back again, in the past, you can see the same thing keep repeating himself, that anytime the 20 EMA is broken, you can see 20 EMA is broken here, you wait and see a trend confirmation. So where do we have the trend confirmation? This was an aggressive move. So we have this a lower high and good. From here now, we start taking trade. From here, there's an engulfing here. We take trade and it's above the 20 MA. We take an entry position. And if you go higher, you can see more trade here, an entry position here. You see this one, an entry position here, provided that this low is higher than this. So we are taking on this trend until finally this trend is broken. So as you are doing it, you are drawing your trend line from here to here and see once this trend is broken, that tells you that the whole move might be coming to an end. All right, so the same thing applies here. If you have taken this trade, you wait for this move to complete and it makes a lower high, kind of a higher low because of this, and now boom, is confirmed here. So any trend, any engulf of the green candle, that is anytime the green candle is engulfed below the 20 MA, you are taking a short position, and there we go. Okay, so you can use this on any market and you still be profitable. All right, use it on any market and still be profitable. So let's go one more. From here now, you can see that the market actually tests the 20 EMA and it was a big bounce. Okay, it didn't break it, So, and it makes a what? A higher low. So from now you'll be waiting. Let's confirm what the market is doing until finally this one is broken. So there is a trend confirmation at this point. So from here, anytime the red is engulfed above 20 MA, we are taking a buy. We are taking a buy. Okay, we are taking a buy. You must have taken a buy here and you'll be stopped out. So now, where will you place your stop loss? As I said before, your stop loss should be placed below that candle you are considering. Assuming, let me expand this. Assuming you took that trade here because of this Marabuzu kind of candle, and you as you engulf this, you are taking the trade. So your stop loss should be here. Assuming you are taking a trade here at the close of this, because of this, your stop loss should be here. Anywhere you are taking a trade, so you put your stop loss below that previous candle, okay, below the previous candle. That is a very good risk to reward trade, and it won't expose your account for easy liquidations. All right, so that is how it is. Now this for us to be profitable in this, remember, as I said before, we need to take a sample trade of at least 20. All right, a sample trade at least 20. What do I mean? You see, you take a trade from 1 trade to 20 trade. All right, and you need to journal this trade. You need to note this trade down. Okay, your entry, your exit, your entry, your exit. Now, if you are profitable after the 20th trade, that is a good sign. Now, this strategy I showed you now has given us over 70 to 80% profit rate, okay, which is very, very, very good, guys. Okay, 70 to 80%, all right, which is very, very, very good. All right, so now the most important thing here is to know that you don't need to alter anything, you don't need to change anything. All you need to do is to follow the market as it develops. As it's developing, it gives you the signal. You don't need to analyze again. You take the trade. As it develops, you take the trade. As it develops, you take the trade. So once you keep taking, after 20 trade, you now go back and analyze your market, analyze your results. And if you are comfortable with the results you got, then take out those ones that you lost and see what actually went wrong. And we've discovered over 70% of the time when we lose money, we find out that those markets were traded against the movement of 20 moving average, like taking a buy below this, like now I can see now taking a buy below this 20 MA. You see that's going up. Yes, actually went up, but finally it stopped you out. All right, so when you're taking a buy below 20 MA, you need to be very, very aggressive and very careful that at the touch of 20 MA, you got to take a profit and put the rest on break even, because market might reverse against you and take you out. All right, so these are the things you need to know and you need to observe also. So let me recap this strategy so that if you didn't get it because maybe I might be a bit fast, then you'll be able to grab everything now. As I said, that we are taking a trade only above a buy, only above 20 MA. And for us to know, we are looking for, when we see a pin bar, okay, above 20 MA, we are taking a trade. When we see an engulfing candle means that the red bars have been engulfed. When you see a red bar like this coming down, coming down, coming down, coming down, and you see one green bar that engulfs those red bars, okay, so we are taking a trade here. All right, so we're either pin bars or engulfing above the 20 MA, we are taking the trade for a buy. And if we reverse the condition, we are taking for a short. So these are the conditions that we are using to enter and go short too. Now, for you to really master this, you see, it's one thing to learn a strategy, and the second thing is to execute it. Trading is a action-based performance, okay, your performance-based oriented results. So learning it is one. Now, all you got to do now is to backtest this, okay? Backtest this on accounts. Now, you can use a spot account on Binance. In case you want to sign up on Binance, you can see the link below. Please, if you've not subscribed to this channel, you can just subscribe by using the link below. So use a spot account, in the sense that you are not using much leverage, you are using zero leverage. Or you can also set across, you are using zero leverage, so that once you are comfortable with the result, okay, with the result you are getting after 20 trade, then it's either you increase your capital or you increase your leverage. So as you are comfortable with the result after every 20 trade, you increase your leverage, you increase your capital. So that's how you make a lot of money on a daily basis, you know, trading Bitcoin using moving average or candlestick. If you have gained any sin of value from this video, please kindly subscribe and like this video. All right, thank you, and see you on the next video.